Hi, I know you have many confusion regarding UAE corporate tax filing. If you have confusions, please watch my video start to end because here we will cover all relevant and technical aspects regarding UAE corporate tax filing, like realizational base, transitional rule, and other things like qualifying group and multinational enterprises group. We will cover all aspects here. Please keep watching this video till the end. Let's go. Here is a Emara tax portal. You can see when you start your filing, there is a basic detail. Can you see here? This is information. First step is taxpayer detail. We need to put all information related to taxable person, and then we need to select second step elections. That is very important and very relevant. Here we need to opt very carefully. If you opt one time, you cannot revoke. Remember that you cannot revoke. You will choose carefully here. Then we will consider here accounting schedule. Fourth, accounting adjustment and exempt income. Fifth, relief and other adjustments. Sixth, seventh, tax liability and tax credit. And lastly, we need to check all the information, whatever we fill, we need to check and sign that. This is simple process we need to follow, but there is involvement of technical terms we need to understand. Here we will understand very simple manner all these things because we will cover through the example that is very relevant for you for your understanding. This is first step. We are going further. Here is basic information according to your corporate tax filing. Whatever you inform that is coming here auto populated. We will start here. Is the above information is correct? Firstly, you need to see and tick yes. Then after we need to fill taxable person information. Here we need to inform, are you a partner in one or more unincorporated partnership? Here is important word is unincorporated partnership. We need to understand, then we can elect yes or no. For understanding this, we need to go here. This is taxpayer details. For relevant thing I cover here. In first step, we will cover here unincorporated partnership. For your understanding, we will take the example. There is Ali and Bright Construction LLC form a joint venture. For what purpose? To build villas in Ajman. They sign an agreement and split profit between them 60% to Bright Construction and 40% to Ali. No new company is registered. Means this is unincorporated partnership. This is example. You can understand what is the unincorporated partnership. If you are fall in this scenario, means you need to elect yes. If you are not falling this scenario, you can easily elect no. Further, for taxable information, we need to understand, is the taxable person is member of multinational enterprises group? For understanding this, we need to understand multinational enterprises group. What is the multinational enterprises group? We need to understand the definition. Here there is two conditions. One is two or more companies whose tax resident is located in different jurisdictions or different countries. You can better understand from the different countries. And means this is second condition, has a total consolidated group revenue that is equal to or more than 3.15 billion during the tax period. Means there is a two condition we need to understand. If you are following one condition, means you have companies in different jurisdiction, but you are not considering multinational enterprises group, because you are second condition you have to follow. Means second condition, this is about to consolidated group revenue that is equal to or more than 3.15 billion. If both condition is following, that time you can elect yes, otherwise you need to elect no. For example, for your understanding, this very simple example, XYZ FZCO is a UAE branch of a multinational group headquarter in Germany with global revenue of AED 10 billion. Here is both condition is followed that, so they can select yes on this type of situation. For further understanding regarding taxpayer information, in first page we need to understand, this is very relevant, is the tax payable person tax resident in a foreign jurisdiction under an applicable double taxation agreement. This is very new terms. Double taxation agreement means If you are resident more than one country or other than UAE, then UAE or home country, there is a double taxation agreement is signed, that time you follow this. For easy understanding, I will take this example. Company ABC Limited is incorporated in India but operate a branch office in the UAE under the India and UAE DTA. Means India and UAE, they have double taxation agreement. This double taxation agreement is avoid double tax on one income. So ABC Limited is tax resident in India. The UAE branch income is also taxed in India. Means that UAE branch income already taxed in India. What will be the impact if you are considering select yes? The UAE branch can claim DTA protection and may not tax again in UAE. Means that income is already taxed in India, so you can get the benefit of DTA. So you don't need to pay on branch income which is situated in UAE. You will not pay even any penny on tax because you already paid tax in India. For further, we will come next with election. Firstly, we need to see in the portal we covered all or skip someone. So we will cover here one to one. This is basic information. We already covered taxable person information. There is important is unincorporated partnership. You already understand with the example, so you can elect accordingly yes or no. Second is the tax return being completed by a government entity or government control entity. Here we will understand if you are a government entity or government control entity or extractive business or non-extractive natural resources business. So you can elect yes, otherwise no. This is a category of exempt persons. If you follow that, you can elect yes, otherwise you can elect no. Further, what is the taxable person's revenue drive during the tax period? Here we need to understand what is the revenue meaning. Revenue means whatever income during the tax period you earn apart from the expenses and relief, that income is considering revenue. If you are natural person, you need to understand your income should be excluded. What the type of income you need to exclude it, like income from the employment or real estate investment or personal investment, that you need to exclude that revenue. That gross revenue we need to select here, we will need to inform here. And next question, has the taxable person financial statement been prepared under the cash or accrual basis? Here we need to select cash or accrual. Generally we need to follow the accrual basis of accounting, but if you are a small businessman, like your revenue is not exceeding 3 million AED in relevant tax period, you can choose cash basis. This is for the small businessman. Further, generally you have to follow accrual basis. After that, we need to understand, does the taxable person conduct more than one business activity? This is auto populated come here. Here my client have two activities that is disclosed here, that is come from basic information that is auto populated here from that. This is relevant for you business activity detail because this is you need to fill according to your business sector revenue percentage. Here you can see estimate the percentage of its total revenue attribute to each business sector. Means if you have two business activity, you need to fill accordingly. One business sector there is a 80%, you need to fill here 80%, and second activity you have to 20%. Means total cannot be exceed 100%. You need to remember that. Here is the taxable person is member of multinational enterprises group. I already considered this through the example. You know that what is the multinational enterprises group. There is two conditions. If both is following you, then you can elect yes, otherwise you need to elect no. Is the taxable person incorporated or otherwise established or registered under the law, the UAE, or under the law of a free zone? This is automatically come according to your basic information. If you are non-resident, it will come no, otherwise it will come yes. Then we will cover here next question, is the taxable person tax resident in foreign jurisdiction under a applicable double taxation agreement? Here you already understand If you already paid tax in other country, you don't need to pay tax in UAE according to the double taxation agreement. You already understand. And then furthermore, free zone is the taxpayer incorporated in free zone. If you are a free zone taxable person, you need to elect yes, otherwise you can elect no. This is first step. We already covered all case question with the example. I hope you already understand all these things. So furthermore, through the election, please keep watching. This is very important. I will cover all aspect, all confusion remove after watching this. I assure you, if you are watching all over the video, you have no confusion how regarding the UAE corporate tax return. And second step, elections. Here we need to next. Here is come first of all. Here you can see the realization basis. Firstly, we need to understand what is the realization basis. Then we can elect yes or no. Because this is very important. If you opt one time, that will be applicable for your all tax period. So very carefully you need to elect yes or no. So for electing this, we need to understand what the meaning of realization basis. Come with me in my slide. This is first slide. We can understand regarding the election realization basis. For better understanding, I will take example for you. A company in Abu Dhabi purchased a land for 82 million. Its value increased to 83 million in the relevant tax period, but they have not sold it. Means if realization basis is elected, means realization basis is the profit when you sold any goods or any property. That time you will consider that profit in the taxation purpose of UAE corporate tax. If realization basis is elected here, no tax to be paid until land is sold. If you are not elected, then you have to pay what the addition is 1 million, that is unrealized gain. You have to pay corporate tax on that. I think you understand what the realization basis. According to your situation, according to your business, you should consider that you need to opt realization basis or not. If you are not understand this scenario, whether it is profitable for you or loss for you, for basic understanding, I will let you understand realization basis is defer the tax. Normally, if you are not selling goods, if your property value is increased, that time you don't need to pay tax on that time. You can defer your corporate tax on that profit. So you can elect for the long term property, you should elect realization basis yes. For further, what is the transition rule in UAE corporate tax? For your understanding, I will take the example. A company purchased building in 2020 for 81 million. On the first tax period when they started, maybe for your situation 1st Jan 2024, its fair market value was 81.5 million. If the company elect to apply the transitional rule, the 80.5 million gain is ignored for tax purpose. Why? Because for the purpose of this scenario, transitional rule is if any unrealized gain earned before first tax period, you don't need to pay any corporate tax on that. I think you already understand this. Furthermore, business restructuring relief may apply. Here we need to understand what is the business restructuring relief. For key condition for this relief, transfer must be between related party. For example, same group 75% common ownership should be there and asset must remain in UAE tax net. The business or part must continue operated after the transfer. There is three conditions you have to follow for getting business restriction relief. For your example, for your understanding, I will take example company A owned by a UAE holding company transfer its entire retail business including asset, employee, customer, all these things. If condition for business restructuring relief are met, no taxable gain is recognized at the time of transfer. This is relief If you are a group that is covered under this business restriction relief, then you will get the benefit of this transfer. You will not even any tax on that type of transaction. I hope you understand this. Last case of this second segment, election. Does the taxpayer tax? Do you have any foreign permanent establishment? So for understanding what is the foreign permanent establishment, for your understanding, this is very simple example. A UAE based consultancy firm open a branch office in Germany with employee and a fixed office. Permanent establishment, as you know, there is any office, branch, representative office in other country other than UAE. That time it will be considered foreign permanent establishment. For your understanding, this example also is same saying. A UAE based consultancy firm open a branch office in Germany with employee and fixed office. The branch regularly sign contract and provide service in the Germany. Then you need to select yes. If you fall this type of scenario, you need to elect yes, otherwise you can elect no. I hope in second segment, whatever the important terms we already covered here, let's go with me in the FTA portal. Then we will see any question is remanded. Please start with me. Election, realization basis. Would the taxable person like to elect to use the realization basis? We already covered that. Next, transitional rule. We already covered that. You need to elect yes, because whatever is unrealized gain you earned before first tax period, if you elect yes, then you can get the benefit of that. After that, there is a small business relief. In last video already I covered this small business relief, so we will not elaborate here. Please watch my previous video for small businessman. And for the transfer within qualifying group. What is the qualifying group? I already covered that. If you're holding 75% or more under same person, there is holding and there is a transfer, you can get the benefit of that. Thereafter, business restriction relief, already I covered that. Whatever the condition, already I covered that. Then foreign permanent establishment income. If you have any foreign permanent establishment and there is some income, you need to disclose here yes, otherwise you need to know. There is two things. If you have foreign permanent establishment and income, because you should have foreign permanent establishment and there should be some income, then you need to elect yes, otherwise you need to elect no. I hope you already understand, and further part we will cover in next video. Thank you for watching my video. If you like, please comment here. If you have any query regarding first two segments, please let me know. We will glad to answer all these queries. Thank you very much.